Thank you very much. I'm John Morrow. I'm Head of Exploration and Production at Glencore. And I'm going to talk this morning about the coming environment that I see for independence. I'm going to start with the current environment and talk about some of the trends that I see in the business. It's very much, we could do this talking about economics, about finding costs and so on. I'm very much going to talk about the market and then draw some conclusions from that, talk about independence a little at the end, and then have some conclusions and some recommendations. I think I've got 20 minutes, actually. Sorry. I thought you said 10 there. So the charts are up. So I'm going to start with the oil price. This has been really the oil price since I've been in the business. I joined in 1980, and this represents my time in the business. It's really been about the price in all those years. Before that, 60s, 70s, it wasn't. Certainly has been in this era. Just a few points about that graph. 1986, fall in 86, brought about by Saudi Arabia opening the valves because they were sick of supporting the price. So where have we heard that before? 91 was the Gulf War, spike there. Late 1990s, although on this scale it looks like a small fall, it was a real depression in the business again, particularly for the FSU, really serious there. And from 2004, it's been a sleigh ride really. Look at that, 2008 financial crisis, recovered fairly quickly from there. And then the current price, which we know all about. And that's the production curve that goes with that. Starts a bit earlier, in 1970. Really growth since 86. In fact, 1.5% is the average over that period. Apart from 2016, there's been some ups and downs, but recently 2016 was only 0.5%. What is it this year? It's looking like 1.6, 1.7%, which really is certainly against some earlier predictions. But at the moment, predictions in terms of production growth, they're going up every month, they're not going down. Just a couple of points to note there. The green is Middle East, which are, I guess, a proxy for OPEC. You can see in 86 they were squeezed quite heavily, and it's been growth for them ever since. And towards the end of the graph, you see the US coming in really since about 2010, 2009, 2010 in terms of their increased production, which lays the seeds of the current price, I guess. So where is the oil coming from? Top 3 producer countries in the world produce a third of crude. The top 5 produce half, so it's quite concentrated. But only one of those 5 leading producers is in OPEC. But where is the resource held? And okay, you can argue about these numbers. Sometimes people are quite cynical about OPEC numbers particularly, but take these numbers at face value. 6 out of the top 8 countries in terms of resource holding are in OPEC. Does that give them significant leverage for the future? We'll see. But if you look at the OPEC countries along the bottom there, and the top, Venezuela, Iran, Iraq, Libya, Nigeria, those are countries not particularly prone to cutting production. I think in any era. So I think it's, as always, an interesting dynamic for OPEC and interesting and difficult for them to actually manage the market. They failed in 85, 86. They're doing pretty well at the moment, I think, in terms of what they're achieving. But let's see how that goes, and particularly in the longer term. One of the key areas of the modern business is the way US production has grown since 2009. And it really is, if you like, a wedge, and there's the wedge of US tight oil driven into price maintenance, which is some irony given OPEC and Saudi's attitude a few years ago by increasing production to try to get the US out of the market. I mean, looking forward, and there's some prediction there, of course, and we'll see, but certainly people feel US tight oil will continue to grow. Talk about that more in a moment. Canadian oil sands, will they stay at that level? Will environmental and other issues depress that production? But certainly North American production has surged and probably will continue to grow for some time. If you want to return on any of these issues, please, Q&A is coming, so we can talk about them, of course. So US production, where is the growth? Where is it built on? It's built on, well, this is 2013 to 2017. It's busy overhead, apologies, but Bakken on the left and Eagle Ford on the right. And, you know, what does this illustrate? Illustrates costs falling in both those areas, 20-25% in the period. And as important, if not more importantly, initial rates, IPs going up by about 50%. So really, you know, a changing dynamic in the US and very much a changing break-even price actually as a result. That's going to continue. Will it continue at that rate? Who knows? Probably not, but it's going to continue. You know, the US always delivers, or seems to anyway. How does tight oil compare with deep water in terms of development economics? Okay, here's an attempt to represent that. Tight oil is in the brown on the base. Let's call that current economics for tight oil. You can see resource build along the bottom and break-even price at NPV 15 along the vertical. Okay, there's a $60 dotted line in there. I had to pick some price, so that's what we picked. Interesting things there, I think. A lot of resource available in US tight oil, but it's a pretty flat line. You only have to make a little, a slight move in price and an improvement in technology, and you bring quite a lot more resource in quite quickly. How much resource is there? Not sure anyone knows. I read all sorts of numbers, but you don't have to tip that line much to bring quite a lot more resource in at current prices. The light blue and dark blue, the light blue line is Deepwater, the Deepwater break-even curve in 2014. The dark blue is let's say where we are now. So obviously an improvement in break-even prices. A couple of things there. One is the number of projects. Each of those diamonds is a project. The number of projects apparently seems to have fallen away. A lot of that is due to size. Project sizes, you look at all those diamonds in the middle of the picture, a lot of those diamonds are quite small projects. By the way, they're clustered together. They're not adding much each. There's a challenge there for small projects, particularly in the deep water. I was talking to someone the other day, CEO of Impact, who's saying what he needed to find in deep water now to make a development project. And, I mean, the numbers are north of 500 million, recoverable, maybe a billion barrels, depending on water depth. I mean, these are big numbers now. You know, it would be interesting to see if 10 or even Jubilee would make it at the moment. Probably not. Again, just one more comment on the blue. It's a fairly flat curve, if you call it a curve. Not much improvement. Certainly improvement in price and better technology would bring quite a lot more resource in. Is that going to depress the price or keep the price down long term? Okay, so that's supply. Demand. Picture of demand on the left. I'm not going to dwell on this, but certainly we've already talked about the fact that it's growing. There's some Wood Mackenzie predictions on the right, if you like. 2015 to 2020, that's 1.5% growth a year, so current growth basically, adding 6 million barrels, something like that, a day. And 2020 to 2025 is 0.5%. Okay, this is conjecture, but probably not far from it, adding 3 million barrels a day. What about gas? On the left is the picture I showed you earlier, compressed on oil production since 1970, actually there. That's grown, as I said, from 86 at 1.5%. What's gas done? It's grown at more than 3%, so more than twice the rate. And that, I think we all know that's continuing. More about gas in a minute, but that's continuing. This is gas volumes discovered since 2000, quite a bit. What does it mean, though? I mean, since 2006, I think, since 2007, on an energy basis, twice as much gas has been found in oil, something like that. So a lot more gas has been found recently. I'm going to talk a little bit about unconventionals and particularly EVs. You know, why EVs? Well, clearly transport, previous overhead there, transport is by far the biggest consumer of oil, and EVs probably have a big part to play in what's coming up. There's some headlines there, including one from my boss, actually. But maybe just to pick out one or two interesting ones, interesting for me anyway. I gave a similar talk to this a few months ago, and on the right-hand side in the middle, October 2016, VW announced it will make 1 million EVs by 2025. I said in that talk, I think that's a bit of a joke, that number is going to come up. Sure enough, it's now up to 3 to 4 million by 2025. And that's in a few months. Well, okay, a year, actually, in terms of their view. And I mean, and that is the way the business is changing at the moment as far as EVs are concerned. And Ivan Glassenberg has said very much the same in the bottom there. Things are moving quickly. These are just snapshots, these headlines, but things are moving fast. And I think you can take a headline today and it'll be different tomorrow. China. China and EVs. Why talk about China and EVs? China is now the biggest car and LCV light cargo vehicle market in the world. 30% of global sales in China. What's global car sales a year? About 90 million units, something like that. So 27 million in China, 2016. And the US, something like 17 million, I think. 19, actually. Japan is the next one. 4.5 million. So so that a real step down. 4.5 million units from US is 19. So the US and China dominate. What's happening in China? Well, they are going for EV in a big way. It's a command economy. It isn't a market-driven economy. So if they say they're going to do something, there's a good chance that they're going to get there pretty close to or past their targets. And what's that driven by? Driven by pollution, one thing, that's for sure. Carbon emissions to an extent, but pollution is a big driver there, and reduction in imported dependence on imported oil as well. Just on the pollution issue, you know, I think looking forward, cities are going to start to tackle or start to provide a forum, a opportunity for EVs. And why are they going to do that? Pollution is one thing, congestion is another. It's actually going to reduce cars on the road as well. Singapore recently announced no new car permits. If you want a new car, someone has to get off the road before you can buy a new one. I mean, that is the way it goes. And I see cities driving, you know, a lot of the progress around EVs, the technology, and indeed the use of fuel. Buses, lorries, buses, you know, switching to gas. And there already are many local buses now running on CNG and even LNG. And LNG is certainly a fuel for heavy trucks. So this technology is changing fast, and a lot of it is pollution driven. How are we doing? 4 minutes. So some more information on the Chinese approach there. But certainly they're moving forward. And I think one of their interesting targets is to sell 5 million, which is a quarter of their market, a fifth of their market by 2020. They are putting a lot more subsidy now into R&D and into their companies. They're taking subsidy off the forecourt and putting it into their businesses, and they're providing subsidy for their cities as well to actually drive this move forward. Biggest market in the world. What happens in India is important, but this is the important market. What happens in the US is important. What happens in Europe as a whole is important. A third of new cars sold in the last 12 months in Norway are EVs or hybrids. So, okay, is Norway a big market? No, it's probably one of the smallest, actually. But certainly things happening in Europe there. You need some electricity. If you're going to have lots of EVs, where's the electricity going to come from? Well, this picture shows that renewables and gas are now the cheapest way to build new generating capacity. And I think, okay, gas maybe not a surprise. Building capacity size is an issue, but you can build some pretty big gas stations. But certainly, as you can see, onshore wind, solar, and so on, and offshore wind, not there, are now cost competitive. And recently, as one of the headlines in the previous graph, Germany, a bid for offshore wind, the bid was no subsidy. Normally you're bidding for subsidy, there was no subsidy in the winning bid. So, you know, changing picture there. People can now build competitive wind power. Just a few words on exploration and independence. Global oil reserves, 1.5 trillion barrels. We'll pick a number, but that's the number on that picture. 75% in the control of NOCs and majors. 75%. So a dominant position in the business. And I think, as far as majors are concerned, Deepwater, large exploration, big development. I mean, they dominate the business. They will continue to do that. And I think it's, from that point of view, tougher for independents to try and enter the big space. Lots of opportunity, though. Exploration, seen diminishing volumes since the 60s, really. It's been a downward slope on the left-hand side there. In the last few years, since 2010, there has been a dramatic fall, and that's since 2010. Not 2013, 14, 2010. That's when the fall started. And by the way, you can see on the red how much gas has been found. You run a tough business here. Okay, so you can see how much gas has been found as a proportion, but all falling. And the number of wells drilled has fallen as well, but okay. But only since about 2014, something like that. So the trend started earlier in terms of lower exploration finding. Independence, you can see the share of E&A wells has really been in a long decline since 2008. Really dramatic fall there. Okay, some conclusions. So I've only got 2 more overheads, all right? Please. Some conclusions now. Okay, if you look at the transport requirement for oil, no doubt it's going to be a very significant energy source for years to come. I'm not going to read this. That's for sure. Cost competitiveness for the oil industry is here. For the first time in my life, my working life, there is real energy-to-energy competition for oil. And that is come through the medium, or will come through the medium, the EV. It will come, and gas particularly will displace oil as well as other generating sources. An interesting dynamic there. Renewables are absolutely now penetrating the market. IEA 450, which is the 2-degree target, that's all the effort that goes around making the 2-degree target, means that when it says further increase in energy efficiency, it means beyond what's driven in the market. So there's going to have to be some forcing if we're going to get to the 2 degrees, and that will mean more renewables, of course. And last overhead here, perhaps the crunch then. What do I see as the opportunities? Gas, definitely an opportunity for independence. And I'm probably telling you all things that you well know, but okay, let's rehearse them. Gas, local distribution of markets. There's some small companies, certainly Africa, VOG, Aminex Sound, and so on. Smaller companies, maybe not so small, for much longer. who are making a great business there. A few years ago, they were on the margin. Now it looks like a great business. LNG and FLNG, no doubt. FLNG particularly for the smaller companies. And I mean, when I say smaller, I'm not being derogatory. I mean not IOCs, not majors. And then, of course, small-scale LNG is coming into this now, and GTL. And these are new technologies, and they're improving. And I think people who are skeptical about them, you know, they should think a bit more freely about that. Consolidation around an existing business, I mean, that's an old one. It's the best thing to do is go and drill next door. Go and drill on the edge of your existing field and so on and so forth. And expand your existing business if you're in gas. Private equity funding acquisition, I mean, it's here. It's happening a lot. The majors are getting out of mature stuff and well-funded, well-founded, well-managed independent startups are getting into those acreages. And that really is a growth area. It's going to continue. Prepayment financing, this is Glencore. This is Glencore. If you want some prepayment, come and see me. You need production. It needs to be oil, although it might move to gas soon. But prepayment financing is definitely a way to go if you're an independent to look for financing to expand your business. And okay, there's two more there. I think I've got to finish.
That's all right, John. Thank you very much. Round of applause for John Morrow, please. Look, we could squeeze in one question. So has anyone got anything they want to ask John? Is anyone going to ask the first question of the day? Got one at the back there. Sorry, Salah, this is only my microphone. Shout. Yeah.
In your opinion, what is the outlook for companies right now listed on the stock exchange looking for sources of energy and output, especially some of the exploration? Are these companies doomed, and is there a whole section of the stock exchange waiting to
I think it depends. Obviously, it depends what you're doing right now. I think the exploration numbers I showed, for me, what they show is exploration has got more difficult. I mean, it's not just a matter of number of wells. If you look at the numbers carefully, you realise that the exploration success rate has gone down for everyone. It's got a lot more difficult. Price is lower. It's difficult to raise money in any event, whether it's for production or whether it's for exploration, particularly for exploration. So I think it's hard to start now as an independent in exploration. You've got the acreage, you've got the business model and business plan, then you can make it work. And there are people doing that. There are people doing that. I won't quote any names, but there are small companies out there farming down. They're still in the business. They've got low work commitments, and they're making it work. But to be honest with you, my view is difficult to start right now in that area. Really difficult.
I'm referring to companies that have already started and they have committed money to projects in their exploration commitment. But with the change in the forward curve, commodities, where do these projects sit? I mean, how many of them are unlikely to ever get funded?
If they're in, I think if they're out of the shallow water or not onshore, I think it's hard. That's all I'd say. I mean, looking at the numbers there.
Okay. And there you have it. All right. We can continue that one offline. Thanks very much, John. Round of applause for John again, everyone.